Hello, 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 everyone. I'm back. And if you're wondering who I am, I'm Mike Arnold, co founder of Pat Trading Partners, along with Bob Iacchino. How is everyone doing? Hey ho, waka waka. George, hello, that was very strange. You're referring to the this afternoon's price? This afternoon's trading? It was it's interesting. Yeah, it's the depth was horrible. Oh, the market just doesn't it wasn't did not seem right. Something was is I can't put my finger on it, but something was just not right. Oh well, that's the way it'll be. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Hey, Boo Boo Bear, where is the picnic basket? So, I don't know. It's just been one of those days. Maybe it's just one of those Yogi Bear days. Yogi Bear days in a bear market. I didn't even think of that. Oh, Bob will be on soon. I need some Bob time. I'm having a rough day, Bob.
I hate hearing that.
I'm having a rough day.
What happened?
That's why I only trade the Asian and the Euro sessions. Well, if I was trading the Asian and Euro sessions, I'd be up all night. I sometimes Euro sessions get up for those, but then I'm even grumpier than I normally am. Uh let's you know what? Let's just bring Bob on. With that, John says, hey, Gary. All right, so you know what? First, let's just we'll get Bob's thoughts on some of the fundamental stuff. We had continuing initial jobless claims coming better. Consumer board leading index was worse, so that's leading us worse. Kansas City numbers coming in still above zero, but coming in lower than prior. And pretty mixed day, except for Tesla's taking the shorts. Healthcare decent. Financials back to rolling over. Still that 75 basis point. I mean, we're a long way off from that. I don't even know why I'm covering, but it's interesting to cover and still a negative gamma. Feeding fear and greed, dipping closer to extreme fear, which is start really watching for a major bottoming pattern. Other than that, costs go down after hours with their earnings. Interesting price action today, but let's get Bob's take on stuff because we had the Bank of Japan, as I talked about this morning. Intervention, first time in 24 years. Wow. Yeah, when was I was trading the last time? That was what 5 years into my trading career at that point. Last time they interfered. I'm an old guy, Bob.
I'm aware of that, Mike.
You're old too.
I think I'm older than you, aren't I?
You are older than me, but we're
I believe I'm older than you.
well. With that, what? First off, I mean the sort of the 500-pound gorilla in the room is the Bank of Japan currency intervention. What's your take on that?
Yeah, so that was dramatic, only because it just rarely works, right? I mean, not long term. They tend to do it when they're going in a certain direction. When in the past they've done it against the current, which is what I believe I saw today was them doing it against the current. So in other words, there's nothing backing it up. They just don't like the price of it, so they buy yen. That doesn't usually work. The times where it did work or has worked, I guess I should say, is when there was either some fundamental news, like maybe some rate changes or some good economic news, and they sort of piled onto that, or some dollar weakness, and they piled onto that. We don't have that right now, which I suspect is why, and I'm kind of quoting the futures here. I suspect that's why, from the high to the close, we got about a 1.5% move back down from the high of the Japanese yen. Again, I'm talking the futures here. I'm looking at the futures contract. It was a really, really high volume, which you would expect. when it's the Japanese central bank intervening. But I mean, we didn't even close up through the rotation zone. In this case, in the chart, you're showing down through the rotation zone with intervention. So I suspect it's the same thing. I suspect it's not going to work again.
Yeah. I mean, just from a technical standpoint, you have key, like literally key support right there, right?
Mhm.
It couldn't close below key support.
No, it couldn't even get through. Really, it just
It
got
got through it briefly, but it couldn't get back to major long term support.
right, right.
This is
So
not going to end well.
it's pretty, yeah,
Is this
nuts.
going to be the final end to MMT?
Is this going to be what?
The end to modern monetary theory eventually?
I mean, I don't know. So it's interesting because I don't even want to say that modern, I'm anti MMT, but I don't even want to say that this period of time shows that it failed. I don't. What it shows to me is that you can effectively operate under the guise of at least part of MMT, that part being the helicopter money part, while there's technological advances that increase productivity and are inherently deflationary, which of course is technology, the internet, all that. You could operate under MMT and those guys under that guise, but whether it works or not, they're not following MMT right now because the solution to inflation for modern monetary theorists is tax hikes. You're supposed to hike taxes when there's inflation to slow spending, accumulate that money in the coffers of government, and then lower taxes. We never see that. But lower taxes when the recession or the economy starts to suffer. When the recession comes, the economy starts to suffer. That's sort of the baseline of MMT. And they're not hiking taxes right now, they're hiking rates. So this is going to be one of those cases where MMT people are going, yeah, it was MMT, but it wasn't really MMT. Sort of the same way socialists say that every time socialism has failed, it wasn't true socialism. It's
Oh,
the
help
same kind
me.
of story.
I like Waka Waka's comment. Bank of Japan used 1% of reserves and did nothing but piss me off.
It's funny too, Waka Waka, because like they're running a current account deficit for the first time in a long, long time. They don't have enough reserves to even buy the energy they need for this coming winter. So they're likely going to have to sell treasuries, which is the equivalent of what they did right now, except they're not going to be buying yen with it. They're going to be buying energy, which is dollar denominated, which will actually raise interest rates and strengthen the dollar, theoretically.
What's that going to do to their tenure
Oh,
that they're
God.
trying to keep pinned still?
I mean, if you can you put up the JGB chart, you'll see how many times the pin fails sort of intraday. You saw the big part of it there at the beginning of June, where it just kept spiking and failing. Then we had that double bottom there in August, reached target. You don't even have to measure it; it reached target, and now you've got that same sort of setup where it's going to spike on the yield side of things,
Yep.
and that's because it doesn't work. It's because the pinning the yen like that, or trying to support the yen through currency intervention doesn't work. It's an old playbook for the Bank of Japan. It didn't work then.
It's going to get interesting. I have a feeling this winter overall is going to be very interesting on all fronts.
Yeah.
What else? Any other takes on like any data that came out today, or any market action, or
So one of the takes was on the euro side of things. I actually think the euro currency is close to bottoming. Um, I really do. I don't have a long position, by the way, but I started to think. I mean, hell would buy this chart other than Coco and TomTom. But um, I started thinking that one of my targets was 98.94 for the euro, and we reached that, right?
Mm-hmm.
The second one, I'm going off of memory. I think it was 98.64. And I can't remember. It was somewhere around there. Um, I'm sorry, one second.
It's okay, Bob.
Hang on, I'm sorry.
It's
I've
okay. I
got a
mean,
I've got a TV spot on Australian television in about a half an hour, so I'm like communicating with them at the same time.
to be a international
Yeah.
TV star.
All
See,
right.
by the way, the euro does have a 4-hour double bottom pattern. Not confirmed or triggered yet, but potential.
Yeah. So what I was saying there is I suspect that the next ECB meeting is October 27th. I mean, it's more than a month away, and their currency is just getting decimated, right? It's just getting hammered. And it's not that it can't keep getting hammered, it certainly can. And they're more guaranteed a recession than the US is. I'm sorry, paying to adjust inflation. They're more guaranteed it than we are. So, from that perspective, I suspect that they're going to take the same approach as the Fed at some point. They might be trying to delay it past winter for Germany. But man, they're also importing inflation with this weak currency. So, I don't know how the hell they get inflation under control unless they do something to strengthen the euro. And it's not likely to be intervention because they don't have the reserves to do it. And also, very much like Japan, but more so, they need their dollar denominated assets to buy energy. So, going into winter like this. So, it's a really ugly situation. And I suspect that Christine Lagarde is going to announce something. She had a speech a couple of days ago, and I'm trying to find. I wrote down some of the comments because I mentioned the comments in one of my CME videos, but I can't find them now. But she basically said that the ECB is going to do everything it can to stave off inflation and fight inflation, and the weak currency just imports it. Let's see, ECB, Lagarde on monetary policy. The euro area expects to raise rates further, and they expect to front load. So she's trying to jawbone it already. That's not likely to work. I mean, the Swiss central bank did 100 basis points.
I thought Sweden did 100. I thought the
I'm
Swiss
sorry,
did.
Sweden. You're right. It was
Yes,
Sweden. Yeah,
Swiss
you're
only
right.
did 50.
So who are the Dutch?
What do you
I'm
mean?
sorry.
Who are the Dutch?
That's
What?
that's a line from Seinfeld. I always loved because he's like, "I'm sorry, Finland is next to Sweden. Then who are the Dutch?" He was just all confused about that whole area, like many people are. Um, yeah, so that's kind of what I think about it. I think there's going to be a chance for a decent long position in the euro, but as always, I'm just going to wait for price action. What I'd like to see is a move up through the rotation zone, a retest, and then a move up toward the 50, and that's probably going to be the extent of the trade if it happens.
Yeah, the only thing short term is a buy on a close above 99.07. And that's just a return potentially to, I mean, just above parity. Just above parity. I just target parity. I mean, when you're talking about 1,000,079, I target parity.
Yeah, yeah, agreed,
I mean,
agreed.
I'm not worried about the 7 extra pips.
Oh my God.
Oh, the let's see. Hey, dark screen sleep. I learned a lot of things during this bear market thanks to Mike and Bob. Well, I'm glad that.
That's awesome.
Bob, Mike, buy the dip. Investors know that people who sold in 2008 missed the bull run after. Would more retail investors holding, can that prevent capitulation? Uh,
Um, I don't think it can prevent it, no, because the issue with so the issue, and Mike, please chime in when I'm done with this little rant. The issue we have, the issue capitulation, Geo, comes from people being over leveraged. It's not people buying and holding. It's people who either need the money because their retirement comes and they were in the stock market too long, which happens a lot, okay, especially when treasuries aren't yielding anything. The 60-40 portfolio, which is 60% bonds, 40% stocks for somebody who's near retirement, right, starts to hurt because they see stocks going up and they decide to shift it, right? They decide to go back into stocks because everybody else is making money. Retail's done that again, regardless of what happened in 2008. They're way deep into stocks, and that's part and parcel because of the Fed's keeping rates low. Savers got punished, so people went into stocks, and that's an admitted policy, by the way. Retail went into risk assets because there was no yield anywhere. So when they get to the point where they just see they have no money left or not enough money left, they can't hold. It doesn't matter what happened in 2008. Doesn't matter what happened in 2001. None of that matters. Now, the second part of it is through the pandemic, there were a lot of people that went into this sort of day trading thing and they hadn't experienced any downturns before. And a lot of them have been hurt already. You could just take the meme stocks or cryptos as your favorite example, pick one. And they started making a lot of money doing it, and they doubled down and tripled down. Mike knows some people personally that just double down and triple down and just always buy the dip, and they just dollar cost average and all that stuff that's already been proven to be a change of wording. Rather, I'm not going to call it bullshit because dollar cost averaging is a real thing. But when you leverage up in a stock and it goes down and you just buy more and you call that dollar cost averaging, that's called catching a falling knife, not dollar cost averaging. So, no, I don't think what happened in 2008 can prevent capitulation. I would argue that it actually is going to, what's happened since 2008 is going to make capitulation worse this time.
I was just gonna say that. You know how many? All right. First off, older people. I mean, older than me and you, Bob. I know so many of them that they went all in. They're still all in the market. Okay,
Right.
all in. Savings accounts weren't paying anything. Bonds were trash. They're all in. Even the old people. We all know the diamond hands from the meme stock thing.
Yep.
But I'm talking to people who 70s, they're now diamond hands for like stocks. Well, it's only a loss when I sell.
Hey, Mike, I don't know if you heard that doorbell. I'll be right back.
So it's only a loss when I sell. Okay, so they're not selling. Still, the market's going back up, even with they don't really pay attention much with the Fed, although they still think the market's going to get rescued. We're not selling. It's only a loss. It's guess when they generally have to sell is when they have to sell. There is no, they'll hold out till they can. And I'm still seeing it. The market's going to go up. The market's going to go up. The market has not hit that pain point for retail, from my perspective. All right, this is just from my perspective, what I hear, what I talk to, it's no, we're all diamond hands now. Well, I think not for smart people who listen to this channel, but because you got to take a loss. So you go into a trade or an investment knowing where your loss is. But it's now like if we can ride it out, it's not a loss till you sell, which, okay, but you have to withstand the duration of the trade. And that's what I'm still seeing. It's not a loss till I sell. Well, when they're forced to sell or they either need the cash or the market keeps going down, at some point it will amplify the eventual capitulation.
There's one
One,
more thing to add to that, Mike, is that so what we saw in yields today, okay, was unbelievable, not just because Mike says all the time it's not necessarily just what happened, but where it happened. Okay, that applies to yields today. I mean, if you look at the 2 year being at 411, that's the highest level since pre 2008. The 10 year getting up to 370. I'd have to go back pretty far to see when that last was, but it wasn't 2018. Um, and what that's going to do to housing. When we had Dave Cullum, the organic chemistry professor from Cornell, on the podcast, he talked about a friend of his in the investment banking world telling him that in 2023 and 2024, a bunch of 3 year arms are going to come due. And mortgages have doubled, in some cases more, depending on what rate you got at the time. So that's going to start in 2023, go 2024, and possibly into 2025. And if you looked at the Fed's dot plots yesterday, late 2024, 2025 is the first cuts they're expecting, if that. So if rates are still this high and all these mortgage resets go, do you think people are going to want to keep their stocks when they can't pay their mortgage? So that's kind of part of it as well, right? Is they're like, oh man, I still got a little bit of money left in the equity markets and I can't pay my mortgage. Capitulation, if it hasn't happened already at that point. So there's a lot that goes into it. It's not just Geo. I'm sorry that we ran on, but I hope it answers your question. It's not just about, wow, I sold my stocks in 2008. I'm not going to sell them this time. A lot of these folks might have to, unfortunately.
also, as I mentioned on this, on here, because I've talked to people because they're like, what should I do now? What should I do? And I said, you know what? At least I'm taking money and putting into some short term bills and everything that are paying decent rates compared to what historical. You can lock up some money on 13-week bills. You know, and they're like, well, I can't. I'm like, why not? They're like, oh, I'm not going to sell any of my stocks at a loss. So, so the reason you can't take advantage of rising rates is because you won't, not you can't, you won't sell any of your stock. They're like, yeah, my whole portfolio's down, but I'm not going to sell because it's going to come back. So, well, how do you want me to answer the question?
Right.
What should you do? Because you won't, again, you're just going to keep holding until some point you can't, because you don't really want an alternative solution of let's park some money in a risk-free vehicle that's actually starting to return in a short term with some decent yield. But I can't sell because I'll take a loss. Well, so, oh well. I don't know what to say. Oh wow, jeez. This is going to get interesting.
What's that?
I'm just looking through. I didn't glance at the yield curve this afternoon. I was just looking at it. Interesting. Yeah, with mortgage rates keep pushing past 6%. I saw some 30-year mortgage rates at 6.5. That's. I mean, this is going to get interesting. Christo has a question.
Friend of mine, real quick, a friend of mine who's a mortgage broker said that the market can handle a percent interest rate. It just can't handle how fast it went to 6.5. And that's the case with almost all markets.
Let's see. I got a question about learning about the Hang Seng. I hate to say that word. I can't pronounce stuff. What's the important thing to know about how it fits in the Asian economies?
Well, I mean, it's Hong Kong's benchmark, right? And that's kind of a big deal because it's a major um, financial, especially, but a major economy in general, even separate from the Shanghai Composite, which is more mainland China. I mean, Hang Seng, I think, launched in about 1969, if I'm not wrong. It's one of the older indexes out there because Hong Kong was basically free. But how it ties into the Asian economies, I would just relate it to how, um, I mean, think about how the S&P ties into the Western economies. It's just one of the major indices. So I'm not sure I understand the question. Um, Hong Kong is one of the more successful places for business in the Pacific Rim. And I'm including Sydney in that. You know, I'm including Tokyo in that. So it's basically China's Nikkei, and because it's Hong Kong, it's more of the actual longer lasting companies, the more developed companies that have been global and have been public for quite some time. So kind of can give you an impression of what's going on in Hong Kong specifically, which is important because they've been losing freedoms ever since the merger of mainland China and Hong Kong, or rather, Hong Kong being given back to China by the British. So I'm not sure if I answered your question or not, but
What just?
what is that?
That's the 10-year.
Wow.
So yeah,
It's just
today was
getting worse.
absolutely brutal for the 10-year.
Yeah, I mean, yields are going to a level that's just super uncomfortable for homeowners that have adjustables. And I don't know what percentage is adjustables this time. I'm going to try and find out.
Yeah, Crystal said West. That's what I mean. How it fits in with Australia and the West.
Yeah, I mean, it's just a representation of the Asian economy, but it's not necessarily a representation of mainland China, although I think it is. It does. There are some mainland stocks listed on the Hang Seng Index, but I would just look at it as the main stock index in the Pacific Rim, which obviously includes Australia. But the Hang Seng collapses, everything there is collapsing. And if the Hang Seng rallies, it has enough pull, for lack of a better word, to pull the rest of the market with it.
Where'd you get that Waka Waka breaking? Janet Yellen still sees inflation as transitory. Well, on a long enough time frame, everything's transitory.
I think he got it from the Babylon Bee or maybe the Onion.
I mean, that's the thing. Transitory. You need to define a time frame because in a long enough time frame, this planet's transitory.
Mm-hmm.
At some point, it'll get swallowed by the sun. So everything is transitory.
Yeah.
Uh, Bob, is there an ETF I can buy the same as buying T bills?
You can just buy T bills.
Well, you can't. You can buy. There's
I
some
mean, you can buy actual
ETFs
T.
that mimic short-term bills. I
Yeah.
just I just go into T bills, but
Yeah. I mean, if you have a regular trading account or a financial advisor, they'll put you in a cash vehicle. I mean, you don't need to specifically be in T bills. They'll put you in a cash vehicle. Again, we don't give financial advice, but they'll put you in a cash vehicle that earns interest close to the rate of T bills. Let's remember T bills have duration. I mean, are you talking about a 1 year T bill or like a 3 month bill, a 2 month bill, six
yep.
month bill? Yeah, I mean a 1 month bill is 273 on the yield, and a 1 year is 408.
What's the
So
13-week going for right now?
13 week,
Yeah, three
uh,
month.
the 3 month
Yeah.
329.
See, that's to keep your cash. That's where I like this stuff for short-term liquidity. You can keep stuff
Yeah,
while waiting for a decent long-term bottom. You can park some money and get at least a halfway decent rate of return.
yeah.
If your financial advisor sucks, get a new financial advisor. Or fire your financial advisor and take control. The last thing you want is a financial advisor that sucks.
Raj, I don't know where you are, but I'll send you to a guy. His name's EJ Malitti. He's in Nebraska.
Uh, oh boy. Looks like Putin will nuke this time. A lot of people start to leave Russia.
That's not a really good thing for equities.
No, that would
Oh my God. Who sees equities going down 80%? Who was that?
that was Waka Waka. Waka
Yeah,
Waka's got
there's
that.
your 80% Waka Waka. And that's an 80% where Mike probably is not going to buy.
Well, well, all right. If it's limited, okay. If
I don't
nuclear
even,
war gets out of hand, no. I
I
don't
don't
think I'll be.
even,
I'll tell you something. We might have some live streams canceled if nuclear war breaks out.
yeah, there might be a couple.
That's the priority will not be the YouTube,
No, no, it won't.
and it will not be a return on capital. It will simply be give me my capital. It's you know. So I mean, I'm not trying to make light of that, but it's some. I mean, oh boy, that would not be good.
Yeah.
Would you start long term buying at June lows?
No, is Gary new?
Yes, Gary's
Um,
newer.
okay, the only reason I asked Gary is because one of the things I've said before is that I've never thought, and Mike hasn't either, that the June lows were the ultimate low. It was funny. I was on a show today on RFD TV called The Cow Guy Close. And there was a guy named Eddie. I don't remember his last name, but Eddie was, they just kept raving about how Eddie talked in January that stocks would fall, and he was the only one who said it. And he said the June lows weren't the lows, and he's the only one who said it. And I'm sitting in the chair thinking, Jesus, I'm on your show every week, and I've said the same stuff. But whatever, I didn't say anything. I just congratulated Eddie on his call. And it might have been that show that I said I expected the NASDAQ to drop 45% next year. I don't remember. But one of the things that I've been saying is that I hope the June lows are not the June low or are not the ultimate lows, because a break of the June lows, I think, will give us a pretty good buying opportunity. So the answer to that question, Gary, and I've said it in here, is no, I wouldn't buy at the June lows. I would want to see a break of the June lows and then some stabilization and a base, and then I might. But it's
And it
all going
might
to
not be still a long term buy. It might
right.
not be a
Maybe
long
not.
term buy. I'm
Maybe
watching for a bounce play, and I'm
not.
not worried about for all right. There's trading opportunities, and we'll have those repeatedly. And then I look at things with the long term, meaning all right, we're now transitioning potentially to a significant bottom. And this is where we go into more of those long term investments, everything else. Well, I don't need to just call the bottom for those. All right. It's the people we could get, short term reversal patterns, but that doesn't mean they're the long term buy pattern yet. And the
Right.
long term buy pattern, you're not going to low ticket. You're not going to buy the absolute for a long term buy because you're not going to get confirmation it was a long term buy off like something like a 4 hour double bottom
Right.
or a daily double bottom. Or any kind of major pattern, you're going to get long term buys, and there's generally not. I mean, yes, there's, I guess, a low that you can pinpoint, but many times you have retests of the low areas. It builds a base,
Hmm.
unless we get a V-shaped reversal, which has generally only happened when you have liquidity injection by the Fed.
I'll tell you, if you guys want to understand like what went on um, with quantitative easing and all the stimulus programs and all that, there's a book called what's it called? The Lords of Easy Money. And it's by a guy named Christopher Leonard. And the reason I bring it up is there's a lot of it not only explains the Fed in very easy to understand plain English and tells you like what had happened and the flow, it shows you the flow of money and everything. But there's also some really great anecdotes in there. One of them was, and I might screw this up a tiny bit because I don't have the book in front of me, but one of the anecdotes was Christopher Leonard was interviewing a CFO, and he wrote this like during the crisis, during the great financial crisis, and then it came out later, but it applies now as well. And he was interviewing, I think it was a CFO from Texas Instruments, and Texas Instruments had taken out a 1.8, again, don't quote me on the amount, $1.8 billion loan, um, bailout loan. Okay, so it was in one of the programs. I don't know if it was TARP or which one it was. And the interest rate was somewhere in the range of like 0.6% or 0.8%, somewhere like that. Okay. And he literally told Bernanke at the time that they're going to use it to buy back stock, all of it. He actually said, and it's in the book, and Christopher Leonard has permission to quote him on this, we're not going to create a single job with this money. We're going to buy back our stock because our stock has a 2.5% dividend yield. And the percentage on the loan averaged about 0.8%. So essentially, they were going to make about 75 basis points, 70, 75 basis points, maybe a little more than that, actually 1.7 basis points on their dividend yield payment to themselves for buying back stock. And they were going to prop the stock up as well. These are the kinds of things that are unwinding and are going to continue to unwind. And when we talk about companies like the NASDAQ and the Russell dropping when rates rise, it's because of things like that, right? Because those things are no longer available when interest rates are higher. So borrowing money at low rates to buy back a high dividend yielding stock isn't available as rates rise. So that's one of the reasons that, and not specifically, but one of the reasons I've not thought the June lows were the low. And I thought, and I actually believe a little bit, at least for now, in this Fed, and that they're going to stick to it. You know, somebody said to me, how can you compliment the Fed on what they're doing right now after 20 years of easy monetary policy? I said, look, obviously, Powell wasn't at the helm for all of it, but he was at the Fed for a lot of it, right? He just wasn't the chair. But look at it like it's like a cheating spouse, right? The spouse cheated and you're not going to get over it and you're not going to forget. But right now, he or she is kind of doing some good stuff, maybe taking care of the kids, maybe gardening. I don't know. But like, you can't yell at them for what they're doing now. You could still be mad about what they did before. Anyway.
All right. Christoph, reading Ubiquity. By the way, if anybody else newer to the stream, fantastic book. It's not specifically about the markets, but it has a great tie-ins with the market and a cascading effect of it's actually a fascinating study of piling up sand and how the ripple effect and how crashes and the undertones of failures, not just in the market, but in any critical system can unravel. It's a fascinating read. So just a little something if you want some good reading. By the way, I'm waiting for capitulation to buy, and in a longer term bear market, there doesn't have to just be one capitulation. Also keep that in mind. Yes, capitulations can be very good buy patterns. However, there does not just have to be one, and you never know which one was the final one until looking in the rearview mirror.
And Gary, you could trade both. I mean, I just talked about wanting to buy euro. So you could trade both. I might pick up Ubiquity when I'm done with this. Here's even this
What are you living with a seal?
Yeah. This guy who started Marquis Jet, his name is Jesse Itzler. He also was involved in Zyco coconut water, and he's done all these things. Decided to hire a Navy SEAL to live with him for a month. It's friggin' hilarious.
He hired a Navy SEAL to live with him?
To live with him, to train him.
Oh.
And I mean, it's hysterical. The workouts are just brutal, and it's hysterical, and it's just funny how this guy responds to everything.
Huh.
It's it's nonfiction, but it's amusing. Like, it's lighter reading. I try to read 10 pages a night, and with this book, I usually get through 20 or 30. So, unlike the last book I read, which was A Hunter-Gatherer's Guide to the 21st Century, where I maxed out at 10 pages because I was rereading pages all the time with all the evolutionary biology that was in the book. That's
Hmm.
also a great book, by the way.
Interesting. See, my
Book club.
general reading.
We're gonna do Traders Outlook book
There you
club.
go, Bob.
We're gonna do Pat Trading Partners book club next.
Yeah, drop acid. That's my
Now, is
reading.
that about hallucinogens and
No, it's about lowering the uric acid in your body.
nice, nice.
It's actually it's not about hallucinogens.
I really thought it was about like hallucinogens and mushrooms and they're not all called hallucinogens. What's the right word for that? And how they can treat depression and trauma and all kinds of other stuff.
Oh yeah, there are the low dose. I mean, that was I was actually just researching a couple things. That's why I just had wanted to hold up that book for because we've talked about Waka Waka goes mushroom hunting, so we've had some interesting conversations. And no, these are the well,
Psychedelics. That's what I was trying to think of. Sorry.
we're not talking about the psychedelic mushrooms from Waka Waka.
Yeah.
So, you know, anything else you want to touch on? I'm still fixated on that 10-year notes chart. That
I
was
know yields are a huge problem for the U.S. economy right now, especially if they continue like this. That was a big move considering how far they've moved already.
rich. Bob, how low U.S. Japanese yen will go after Japan intervention? I think
I would say ask Mike for a target.
uh,
There's going to be a price action target. It's not going to be an actual target. So
their their intervention might have already been short lived.
you could see a breakout of that sort of sideways channel happening very easily now.
I mean, yeah. What I
Yeah.
still have targets on here. My next target, I'm still expecting a break above. They're going to have to jump in again at some point. But I'm targeting 147.84 to about 148.59 as my next target area. My key
Mm.
support, even if they try to push this and get down again soon, which they're going to have to dump a lot more reserves, is my 139 is major support. So they're going to have to really go nuts if they want to break that. Those that's who's there's no saying they won't, but this when you can't even you and your intervention doesn't even substantially last a day, you got problems. Yes, Ted with the psychotropics.
Yeah, I mean, psychotropics, psychedelics. I know there's differences, but yeah, the whole slew of them. So
See how this live stream goes downhill rapidly.
yeah, I went downhill. I got to go. I got this TV spot
Yeah,
coming up.
well,
So, is there any more questions for me before I
I
go,
don't
guys?
see anything.
No.
Nope. Oh, we're all right. We'll catch you later, Bob.
All right, guys.
All right.
Hey, there was a question.
Where?
There was, is there anything important other than CPI?
Where
Somebody
was
said,
that?
I didn't, I don't know who said it or when they said it.
I'm
Yeah,
looking.
non-farm payrolls is going to be critical. Somebody
Oh, is
asked,
there any more important data coming out before the next CPI? Well, yeah.
yeah, non-farm payrolls will
Fir-
matter a lot,
First Friday of the month.
a lot. So, anyway, all right,
So
guys.
not next Friday, it's the following Friday. And then CPI is on the 13th of October.
Right,
So those are the next two biggies.
two biggies. All right, guys.
All right.
Cheers, everybody.
Hey, everybody. All right, just me. Walk a walk, as I said before, I get a trip from the market, so I don't need a trip from shrooms. Yeah, this market. Oh, may we live in interesting market times. Japan's caught between a rock. We talked about that before, Raj. They're caught between a rock and a hard place now. It's going to get really interesting. Let me just get through some stuff. I went on a long time, an hour 15 yesterday. We're already going on 45 minutes now. Still choppy, downward bias day. The market, this was not good trading action today. The trading action has me a little worried. Still watching for the bottoming pattern, but not going to front run anything. If we really start getting some momentum, I'm still targeting. Oh, by the way, I got some questions because this morning I was talking choppy to potentially bullish with we never got above key levels. If I don't mention, people are like, well, does that mean you're not short anymore? Does this mean this? If you want, and I don't mention my, because again, we're not here to solicit trades. We're not here to tell anybody things. But if you want to know my longer term stuff or what my longer term thoughts are, I mention it with the longer term and medium to long term systems. If they're in sell mode, the default is selling. Okay, I don't have to reiterate that every day. Long term always trumps short term. I try to focus on stuff that's going to trump, that could happen in the short term, because the long term's a given. Until that changes, I'm in long term bearish mode. Now, if we get a capitulation move, I'll say that was registered, because there's specific criteria for a capitulation move. I will say, hey, we just met specific criteria for a capitulation move. This could be at least a short to medium term bottom. That's easy to list out. But otherwise than that, assume the long term trumps the short term unless some short term key levels are broken. For example, long term and medium term, even based off the close below the 62.5. I've talked about probability wise, we should retest 37.25 to 36.42. We have not hit 37.25 yet, so any bounces would be for a bounce and then a rollover play until we hit this area. Then we'll watch for a longer term or a more medium term potential bottom if it holds. If it doesn't hold, I've listed the levels below. For example, I'm going to tell you, now this is getting horribly sloppy, especially on this afternoon price action, but it is still valid. We have a potential bottoming pattern, 4 hour. It's very sloppy because even on the 1 hour now, it's turning into, with this spike up, it's more of a triple, but I am going to use these targets. It's lower probability. However, we start getting the break, and this is why there's two things that show the same level, 38.33. A close above that on the 4 hour time frame would be with a potential return to about 3,900 is the full target. On the daily, if you get a close above today's high, it's a short-term bounce play into the rotation zone. If you get a break above today's high, it could be rolled into a short-term bounce play only if it closes. If neither of those happen, we still have the long to medium term downward pressure. There's nothing that's standing in the way of that. I don't have to list that every time. Otherwise, we'd turn the morning live stream into an hour, hour and a half in the afternoon. I need to do other things. So assume, unless I give clarification on something more to the medium or longer term, those patterns are still in place, and anything here like a 4 hour pattern can last a day, 2 or 3. At a daily pattern can last, especially going against the longer term trend, could just last. It could last 1 day. It could last 2. It could last 3 days. It could morph into a little something bigger. But if there's no other comments on it, don't assume that that means, okay, because I'm watching for a bottoming pattern does not mean that trumps the longer term patterns yet. Even let's say we triggered on, let's say tomorrow we rallied up, broke above today's high and closed above it. Does that trump the overall longer term patterns? No. Does that mean a major low is in? No. We haven't even hit that next probability level. Does that mean I'm going to watch for follow through into the daily rotation zone? Yes. You got to put these pieces together. All right? That's some clarification. We traded down against this 3772 harmonic today. So that now we've hit the next key harmonic level. We are in oversold still on the daily basis. We have cycles at the bottom. Still watching for the bounce play. However, we are getting to a big instability. Again, I'm not affiliated with this book at all, but you should actually read Ubiquity. Christoph is reading it, and when I say instability, this is where the pile of sand is getting multiple areas where if we start getting a cascading effect, you could have a fair amount of that sand pile cascade down. I'm starting to see it. All right. So only thing is I need some of these more bounce patterns to trigger. There is no way I'm going to stand in front of anything. And from the longer perspective, it's just you're not trying to call a absolute bottom. It's trailing a stop. Just as when we had this rally up here, it was trailing a stop higher and it was not selling the high tick. It was selling a rollover play and trailing a stop. And actually, the stops on the trailings thing were all hit on this day. So let's say we get the bounce play. That could be to unravel a longer term, some of these sell patterns. Remember, we hit the head and shoulders patterns. We hit those key levels. All right, there are shorts coming in here. So now, are we trying to bottom tick any shorts? No. You get some of these 4-hour or daily things that can be a stop out for some shorts in order to reestablish them on a bounce play. Or if you're super long term, you're not even worried about a bounce play like that because you're not trying to capture every move. This is where you have to assess your own portfolio and what you're doing. And I can't do that for you. Now, since we hit these, I'm waiting for another, at least a decent pausing bar to move our next major level since we already have what I'm watching. So tomorrow, or overnight, if we break below today's lows with major momentum, it'd be 37.45. Then we have a cluster, 37.25 area. So now not only do we have a retracement harmonic, we have a projection there. So that is a very key area I will start watching separate from these patterns I've listed, which may never trigger. That's my next key major area. Tomorrow is Friday. Also remember, no earnings, so that we don't have to worry about. Tomorrow, we have the medium firm composite manufacturing and services flash numbers. 15 minutes after the open. More minor, but you will, since there's not much else going on, you will have people look at them, especially based off the last services number being horrible. So people will pay attention to this, since essentially the Fed also said, we're going to keep going. And then you have Powell speaking at 1. Fantastic. 1 o'clock on a Friday. Sorry, little mouse issue there. So, other than that, nothing unless you're an oil trader. And then do not ignore the rig counts, which have been dropping again. Also, if you're an oil trader, do not ignore the potential tropical storm forming in the lower Caribbean because it could eventually target the Gulf, which could lead to some upwards pressure on crude. I'm paying very close attention to it if you're a crude trader. All right. Did Nat Gas confirm the downside play today? Nat Gas. Come on, Natty Gas. Natural gas did trigger. It was confirmed back on the 19th. This is triggered. Do not ignore this 642, 643 area. Why do I say that? We can still see upwards pressure on natty gas. This is a major retracement harmonic. It's the 200. So this is a very key area now. This was triggered on the close. Rallies back to this basing area and the declining daily rotation zone are, in order to get proper reward to risk, are areas to look for a pullback, because reward to risk is really tough based off the waiting for that close today. All right, just some extra little stuff because of where it sits with that rising 200. Remember, the 200 is an area, so it's not just the 200 right there. Okay, remember, 200 is an area, an area. So I'm watching that area, and this red line is a major harmonic. The 75% is the most recent one of the key retracement harmonics. Look at that 62.5, by the way. If you're still wondering how powerful it is, got the bounce right off of it there, which doesn't mean you don't sit and say, oh, it didn't close below 62.5. I'm not trading the double, because that doesn't matter. You could easily see a bounce and then the next rollover play. I'm just pointing that out. The next major harmonic down is at 75. Another harmonic coming in right there in the 200, and the first target for the double. I don't care if you trade natty gas or not. I'm pointing this out for a reason, because you got to take things into account when you're setting up your trade and key areas. So this weighs even more heavily for. This can even be for taking partial profits if it can get put on it proper reward to risk. All right. And that would require using a tighter stop. So there's your answer, Ted. And that gave you, and when I talk about stuff, don't just tune out. Oh, he's going off on natty gas. He's going off on the dollar index. He's going off on some stock I don't trade. It doesn't matter. You learn the principles. You learn the key things. And if you pay attention, you're going to see them, and then you can apply them to the markets you trade. Strategy Freeman, by the way, the live stream watching you trade the Fed announcement was very helpful. We'll look to do more of that. VIX head and shoulders on the 4-hour chart. Not on mine. This is not a head and shoulders. Not by our rules. Not anywhere close. And it's not even on the 1 hour. You can't say, I don't even know what this would be, a spiky head. This is not, this is the move it would be reversing anyways, even if it was properly formed. So not from my perspective, maybe from the head and shoulders you follow. Lower gas prices will bring down solar stocks. I think we're going to get a lot of downward pressure on stocks anyways. If a ticker hits a new 52-week high, does it usually pull back? Not necessarily. You can, again, it depends on the context of it. Many times you'll get a pause. You can get a pause. Remember, there's two kinds of, especially if it gets to major overbought conditions. Now, here's what I'll say. There's two kinds of things. I'd have to think of an example. For example, a stock that breaks out of a base to go to 52-week highs, all right, is very, I'll give you an example. Let me use Apple. This long, see how this, let me get to the weekly. See this? You had this major consolidation move. Then it broke out. And then this is weeks, remember. Yeah, eventually you'll always get some pullback. But you see how it went? This was actually closed at new 52-week highs. And you didn't get a pullback for a number of weeks. And then it didn't pull back that much because it based before then. Versus this move. See this move? This is where you have to put it in the context with the price action. You see this? This was a poke to new 52-week highs. Did you have a solid base? No. And you actually formed, a double topping pattern there. So, the longer the base, the more sustainable a breakout to new highs is. The longer the base before. The shorter the base, or just a little poke above that, you generally get the pullback. Now this, I'm just trying to find a chart that would give you something. Again, you see this move. Now, we pulled back. Look at this. Look at this. So you had made new highs, and look at the amount of time before you made a new high since that. You see, this is a huge base. Now you're breaking above it. Okay? Verse, you see here? No base, new highs. Now you get the bigger pullback. So keep that in mind when you're watching for new highs. You got to put it in terms. I've done a lot of testing with this. You got to take a look at the price action leading up to those highs. Longer the base, more sustainable the rally off of it with the smaller pullback potential. The shorter the base, the bigger the pullback, generally after the new highs. Is it always? No. But that's more a general rule of thumb. Like again, new high, right? Let me update that. Very little base, new high. That's why I don't just have a system that says new 52-week high, buy it. This was a new 52-week high. This did not form a decent base. The bigger the base, the more sustainable it is. Like this, new 52-week high, bigger base. This was just a sideways move. And then you got a little bigger pullback, but still not a huge pullback after multiple new 52-week highs because you had a bigger base forming. Does that answer your question, John? Let me know. Oh, could somebody report that crap? And then I'm calling it a day. We can look at some more stuff tomorrow. Where's the rollover play? What do you mean? Where's a topping play? I don't understand what you mean. Where's the rollover play? Where are you watching for a rollover? This is not. It's another juice play. Where do you find that? There is no topping play just yet. I'd just be watching for with these targets. Here's the two. I'd really be watching. Again, here's your next target levels up. This was a longer term little double, but this is another juice play. They're your longer term targets. Again, this thing will roll over and crash back down, but those are your targets. This is actually a double bottom on a weekly basis. I hate these friggin' stocks. Now this is a pretty decent form channel. And you do have it's sloppy. Yeah, I'd be watching for a breakdown play in this. Ew, yeah. Well, there's a nice gap. There's a nice gap play here. I just want to see. It's a channel play, so this is a lower probability. But I'd utilize these targets because you have an extended, it's an interesting play here. You're still reversing this move technically, but it's the lower probability kind. But the thing that captures my mind that makes it interesting is we do have a nice little breakdown play for a gap fill. That could be rolled into a bigger play. That's why I'd utilize those targets. With a nice corrective flag pattern. So there's some short plays in Snowflake. Where do I see NVIDIA long term? Well, NVIDIA is sitting at a very key level. We get below this long term. My next major target, once I'm watching for some kind of short term bonding play. My next major target is 70 bucks. Watching for 70 bucks. Longer term. Longer term. Not in the next couple weeks. I'm talking as the bear market continues. My next minor target would be about 110, 103 to 110 would be my next minor target area. My next major target is 70 bucks. So you should be able to answer your question. And so if you were trading this from the long side, I'd just be raising I'd just continue to trail a stop. But I'd keep my stop still below. I mean, I'd use some of these levels to unwind something, but then I keep my stop below, if you're trying to hold for longer term, below this breakout level. All right, I'm going to wrap this up again. We'll get to some other stuff. I got to finish this up. Roblox at target. Do we bounce here? Well, you could a bounce play. You've broken down. Let me just see off this whole up move. You're in a short-term bounce zone. You broke below key support. You have a super aggressive buy, which would just be for return to the rotation zone on the daily on a close above today's high. You're between the 50 and 62.5. You get a close below the 62.5. you're easily watching for a return to your May and middle of June base. If you do get a bounce, it would be a short-term bounce into this. It would only be a short-term bounce. Once you get the close below 33.74, watch out below. Not only because of 62.5, but also look at this. Look at just this. Let me take off. You see this? So resistance, resistance, resistance. Tested support. You start getting a close below here. What did you just close below? A lot of resistance becoming support. Support now broken. And then you have the probabilities from the 62.5. I would not want to be a buyer at that point. Any buys would be on a short-term bounce. And the only buy potential is based off today's high on a closing basis. All right? That's without doing, and I'm not going to sit and do multi-time frame analysis. That's on Roblox right now. And another thing, keep in mind, it's got no to P to E in erasing rights, and it loses money. Long term, even over the next 6 months, and that's my long term time frame right now, would not want to be accumulating a stock like that at these levels. Because this, you can see multiple retests of this low area over time. All right. With that, I'll see everybody tomorrow, 8 a.m. for the morning live stream. Hope everyone has a fantastic evening. Thanks for tuning in. Bye for now.